Traders! Stop taking random trade signals on the RSI in isolation and pay attention. Bitcoin is at a very sensitive point right now. Price is sitting between two major moving averages. Liquidity is developing on both sides, and the market is determining who gets trapped next. There's also a very clear trade idea developing on Ethereum, but we'll walk through the structure step by step and reveal the details in this video, so make sure you watch the whole thing. Let's go! Hey, as you know, I'm running a fully public trade challenge, growing an account from $10,000 to $100,000. All trades are shared live inside my free Telegram channel, and nothing is forced. I wait for price to come to my levels, and then I trade only when structure confirms. Before we go deeper into the charts, let's talk about what's happening on the macro level, because this matters a lot for timing and for expected range. First, Vitalik Buterin warned that Ethereum going mainstream has hurt decentralization and privacy, and said reversing that will be a priority in 2026. This is important context. It doesn't invalidate Ethereum, but it tells us that the protocol is entering a self-correction phase, not a hype phase. Markets tend to reward that long term, but price still needs structure. No wonder why it's been so sluggish. It's very interesting that the founder of Ethereum thinks it's too mainstream and wants to make it less mainstream. You would think that he would want more adoption, right? Not less. Seems counterintuitive. So let me know in the comments. How do you think this is going to affect Ethereum's ecosystem? Do you think it's a positive? Do you think it's a negative? This is something you really need to think about, especially if you're an investor on a larger time horizon, because something like this can shape the future outcome of such an asset. Certainly worth paying attention to. Next, Bitcoin is going into one of the largest option expiries of the year. Around $8.27 billion in Bitcoin options on January 30th. Calls are clustered near 100K, puts are sitting between 65K and 80K, and max pain sits around 90K. That tells us one thing clearly. You need to learn how to trade options. No, I'm joking. Range expansion is coming, and positioning will matter more than anything else. And then, ETF demand is back. Bitcoin ETFs bought $1.42 billion worth, Mr. Powers, of Bitcoin over the previous week alone, the strongest inflow since October. That's not leverage. That's real capital stepping back in.
Actually, that would be me buying most of that.
But Michael, I thought you bought spot ETF for your treasury.
Yeah, right. That's for strategy. But I also have my own personal account, so, just don't tell anyone. It's a secret, okay?
Great. Thanks for the heads up. Anyway, I need to move along here. So people, we have ETF demand returning, heavy options activity affecting price action, and structure shaping the next leg. Now, let's see how all of this lines up with the charts. Let's start with the Bitcoin daily chart. Right now, Bitcoin has formed an order block right on top of the 50-period daily moving average, and price has pushed above it. That is constructive. But just above that sits the 100-period daily moving average, and price is still struggling to cleanly accept above that. This is a very important area. If Bitcoin fails to hold here, price will likely rotate back to the 50-period moving average and potentially even lower. But if price does hold this zone and starts closing above the 100-period moving average, that opens the door to a continuation higher. This is a classic acceptance versus rejection scenario. Now, let's zoom out into the 4-hour chart, because the structure here is very clean. We have a clear key level, and price is currently developing liquidity on both sides, forming a tightening triangular structure. Above us, there's a supply zone around the 96,777 area where price previously rejected. Below us, there's a strong demand zone around the 91,951 area, the exact place from which price rallied higher. That tells us two things. There's a real demand below, and a supply exists overhead. From here, price can do one of two things. Either go back into the key level or demand zone and then continue higher, or push higher first, tap supply, and then rotate lower. Either way, expansion comes after liquidity is consumed, not before. On the 2-hour time frame, we can clearly see two order blocks. Price is currently reacting to the upper one, and the reaction has been decent so far. From here, price can either break higher from this order block or rotate lower into the second order block, then continue. This is why lower time frame structure matters. It tells us where reactions are likely, not where to force a trade, people. Now, let's move to Ethereum because this is where our trade idea is forming. As you can see here on the daily time frame, the $3,300 area is a key level. Our long idea is not from here though. It's from the order block here below. What we do not want to see is price pushing up and closing above the 3424 area, which is up in here. If that happens, this specific trade idea is no longer in play. Ideally, price either consolidates briefly here or starts rotating lower and moves back toward the $3,000 price zone where demand sits. Quick update on the trade challenge. The account is currently sitting just under $10,500, up $499.23, which is a 4.99% gain. So far, 2 trades, win rate 100%. The trades were a long in render and a long on link. Both were examples of defined risk and clean structure. On the 4-hour chart, we can see this setup very clearly. There's an order block around the $3,000 level, and below that, we can see sell-side liquidity waiting to be consumed. Here is the exact plan. Entry area, 3,039 to 3,040. Stop loss, 2,850. Profit objective, 3,424. This is a clean, structure-based trade. We wait for liquidity to be consumed, price to tap the order block, and then look for confirmation. This would be the third trade idea of the challenge, if and only if price comes to us. So, when you put everything together, Bitcoin is fluctuating between the 50 and the 100 moving average. Liquidity is developing on both sides. Clear Bitcoin reaction zones are defined. Ethereum has a clear pullback-based long idea, and no trades are being forced. This is a market that rewards patience, not forced trades, people. By the way, all trades in this challenge are done on WeX, which is a platform I use right now. It's user-friendly, the trades are smooth, and it works well for managing futures as well. If you sign up using the link in the description, you don't even need to enter a code. It's applied automatically. Using that link helps support the channel, and if you were going to sign up anyway, that would just be really cool. I also track everything on Profit Precision to keep the challenge transparent. As mentioned earlier, all trades are shared live inside my free Telegram channel. Link for everything can be found in the description. Other than that, I will see you in the next one.